Good afternoon, folks. Welcome to our Wednesday webinar for August 22nd. Frank's feeling a little bit under the weather, so he's joining us, but he's not going to talk. He's got a sore throat and kind of taking some cough syrup and cough drops and stuff, so we'll just let him sit in the background and enjoy our analysis today. Thank you guys for joining. We have FOMC minutes today, so it's going to be an interesting day. It's not the full-fledged FOMC report, but it's minutes, and it could have an impact on the market. The market's been doing really well the last few days, and since last Wednesday, remember last Wednesday we were looking at the market, and it was kind of at a spot where it had the potential of going in two different directions, which of course it tends to normally have. Of course, you can always go up or down, but we were really at a crossroads where we could have continued to pull back, or if that didn't happen, we could have made a run for highs. And I think now it's pretty obvious that the run for highs was what was decided. And we're at a spot now in the markets where we're doing very well, right? We've moved to new highs, and we're going to get to the charts in a minute. But overall, because of the nature with which it's occurred, the trading opportunities aren't nearly as wide as you'd expect, because a lot of names have already sort of taken off. And the ones that still present good risk rewards are the ones that aren't moving, which is usually for a reason. So it's kind of a paradox where the market's doing well, but the trades that I'm finding are not nearly as exciting as maybe what we found a few weeks ago when the market wasn't doing quite as strong. But we'll get to that in a minute. My name is Stock Darts, and as I mentioned before, Frank is Stock Guy 22. You could follow us on Twitter and under either one of those names, also on YouTube under either one of those names. And then I also have a patreon.com page, patreon.com/StockDarts, where I tend to put trade ideas. Those of you that are here have probably been familiar with the site. I know, Ron, you're one of my subscribers. And what I do on there is I have a lot of free content, a lot of paid content, and I try to offer extra ideas from day to day. I usually post something at least once a day, at least for the beginning of the week, at least Monday, Tuesday, Wednesday, Thursday. Sometimes Friday I won't find much because it's already the end of the week. But I try to post general trade ideas or repost stuff like these webinars and just give you guys extra content so you can start following every day instead of waiting for Wednesday to ask me questions or to see what I'm looking at in the market. We also have a Discord chat. If you want access to it and you don't have, just send me a message and I'll send you an invite link to that as well. Other than that, let's go ahead and get started and take a look at the S&P 500. Right, so here's a look at SPY, the ETF for the S&P 500. And you can see we printed new all-time highs yesterday, right? So we finally pushed through and are now in new highs. Now, obviously, it was very quick, very short-lived. We ended up printing a doji, and today we are right at the edge of what was our previous all-time high. So you can see we're struggling to push forward. And we'll see if FOMC is sort of the catalyst to say, all right, we hit our ceiling, we could pull back now, or if we have a non-event or even a slightly bullishly construed FOMC event that says, all right, we can just push through and start printing new highs and start mimicking what we're seeing on IWM. And so I think that's the case right now. I think there was a pretty good hint that we were probably going to push to these new highs, or at least attempt to push to new highs on the S&P 500 with the way IWM and the NASDAQ were performing over the last couple of months. And I think the only issue now is finding the Dow Jones in a similar spot and seeing if they could sort of play catch up as well. But overall, the markets are very strong. Unfortunately, a lot of the technical analysis that we do today might end up being overshadowed by whatever happens with FOMC. But for now, we just have to assume, trading in a vacuum and looking at it, how we would react based off of where we are now. And I think, as you can see, we've gone up 4 or 5 days in a row. Not anything really overextended yet where we have to worry too much, but at the same time, we're starting to get a little bit overbought in that we've gone up a few days in a row and probably are due for a pause before we could really push forward. But what I'm seeing again is a market that has a lot of momentum to the upside, and it looks like it's not really totally abated yet. It looks like we still have room for a little bit further of a push before we really have to sort of consolidate and start pushing sideways. Overall, we look at the weekly chart. things look pretty strong, right? You take a look at where we are, where we've been, and we're attempting to continue to hold this trend line. Now, I think for the most part, this trend line has been broken pretty decisively, and at this time, we can almost maybe readjust it a bit and say that this is what's happening, right? I think maybe this is probably what I should have done a few weeks ago. Is it looks like what we've done is we've downshifted, right? And now we're trading the same trajectory, just slightly lower, but the same sort of slope, and continuing to try to make our climb. Now, a lot of times what happens with these downshifts is eventually it sort of turns into a stair step, and I think that's what we've seen on IWM and the NASDAQ, and what we haven't quite seen on the S&P 500 yet. But for the most part, I think that we are still in a pretty strong uptrend, and it looks like maybe the broad consolidation I was looking for might be close to an end now. There are two ways, again, of interpreting this, right? One is we're right at the ceiling of the broad range, and chances are that we're going to find a lot of resistance here, and we're going to come back and test the bottom of that range. And I think that's still a very, very valid consideration, and something that we should be watching in case it does occur. And if I was just trading SPY in a vacuum, I was just looking and analyzing the S&P 500 without looking at anything else, I'd say that's the most likely scenario, is that we will find a stiff wall of resistance, a stiff wall of selling here, and we will start to pull back and start to test the middle of this average, or of this range, and then eventually probably probe all the way down to the bottom and just sort of continue building sideways until we could find a way of stair-stepping higher. And that would be, again, what I would look at. Just looking at the S&P 500, that's what looks like the most likely scenario. However, as we move forward and we take a look at what the NASDAQ has done and what IWM and the small caps of the Russell 2000 have done, they've already sort of pushed past their broad range consolidation and started to stair step higher, which leads me to believe that maybe the S&P 500 is going to do the same thing, right? So that's kind of where we stand right now, is trying to figure out which one of these theories is, or which one of these potential scenarios is going to hold out. And so we have to sort of examine both right now. Again, FOMC today should give us a better idea, and how we close today, how we open tomorrow, should give us a better idea of whether we need to come back and revisit 280 and slightly below, or whether we're going to push forward and start to really explore new highs, and then possibly start to set up with this 285 as a floor for the next range. And I think at this point, it's still to be decided, right? Typically, when you're at the top of a range, you don't want to be buying, right? So that's one thing that I opened up with this, and I think that this is the one thing you can take away from today with certainty, is the market is doing well, but the risk reward and the trading opportunities right now aren't really as great as they were 2 weeks ago or 3 weeks ago. As I said at my Patreon.com page, I've been trying to find trade ideas almost every day. And 2 weeks ago, there was a million trades. I had to look at 10, 15 trades and then try to figure out which 2 or 3 I liked the best. And then the last 2 or 3 days, it's like pulling teeth. I'm finding 1 or 2 trades, period, that I like. And again, I'm pretty picky with what I like to trade. They have to be high probability setups. They have to be nice patterns. They have to be ready to occur. And they have to have good risk reward. And I've been finding a lot less of those scenarios. And the reason is pretty obvious and pretty straightforward. The market's already moved. It's moved up 5 days in a row. At this point, most of the good setups have already occurred. And the ones that are still not breaking out or in good risk reward are the ones that haven't moved, and they haven't moved usually for a reason. So you find yourself in a spot where, as I said again, it's a little bit of a paradox, where the market is doing well, but it's not a great time to trade. And I think that's the one thing we have right now, is we need to wait a little bit to get a better opportunity and to find more trades that are worth taking. So at this point, if you're looking for trades, you have to be you really have to dig in, and you have to be pretty thorough with your research to find trades that are still giving opportunities. And I mean, they're out there. Not saying to just sit on your hands and not trade anything at all. Just understand that you have to look pretty deeply. You don't want to just go chasing names into resistance right now. You want to make sure that you find good names and you find high probability setups. But at this point, you really have to dig to find them. Now, as far as the S&P 500, what we can expect, what levels we're looking at, we are at a very clear level here at 285, 286, right? If we can maintain price action above it, then we can start to build a new range. I think we've established 280 as a nice floor. We've come and tested it 2 or 3 times now, and any pullback that we get in the markets, if we do sell off based off of whatever happens with the FOMC minutes today, I expect 280 to be a good floor and a good spot to go ahead and start getting long again if we do approach that. Now, ideally, if we do approach that level again, it'll be something like this, where it coincides with the bottom of the channel that we started to develop back in March. And that would be a very, very nice spot to look at buying a dip. Now, again, that's probably not going to occur for another few weeks if we do pull back. Probably maybe another 2 weeks if we do have something like that. But you never know. Sometimes once selling steps in, it could slice through levels really fast. And so that's the ideal level that I would be looking at as far as buying a dip, is this convergence of these two trend lines that would also probably be pretty close to the 50-period moving average. And that'd be a great spot to look at buying the dip. And if we did pull back, I think a lot of trade setups would have reset and given us new opportunities to look for better ideas and better trades. Now, if we do get a good FOMC report and we break out, then I think, again, we just have to wait, right? We've got pretty steep action to the upside. And at this point, it just becomes harder to chase. I'm not saying you don't want to short this. You just don't want to chase the action, right? You just want to be patient and wait for a better opportunity to set up. I think what would be ideal here is we get another 2-day move back up to the top of the channel, and then it comes back down and retest this 286, right? And what we end up doing is setting up for a new floor above 286, sort of like this, right? So we break out, we come back and retest, and I think it'd be very similar to what happened over here in the middle of July, right? Where we just sort of peaked out to new highs, came back, short retest, and then we ended up starting to make our way above it. And I think if we could see a scenario like that again, that would be at least a 2 or 3 day consolidation. Would give us a chance to find some trades that are printing bull flags, or coming back and retesting breakouts and doing something similar. And at that point, maybe we have better trading opportunities to the upside based off the breakout. But if we just zoom higher today in the afternoon, again, I don't think that that's going to really give us that many great trading opportunities. So we still need to be sort of patient and look for better opportunities and make sure we find charts or patterns that are mimicking the two basic scenarios that I just outlined. Here's a look at the NASDAQ. And again, the NASDAQ, I think, was last Wednesday we were looking at it. This was one of the charts that was showing us that we were coming into really good support and that there was a pretty good chance that the market would bounce. You can see we had this nice little short-term ascending trend line. We had the nice support level that we confirmed at 177. And they both sort of teamed up with the 50-period moving average to sort of propel price higher. Now, the NASDAQ is lagging, right? You look at where the S&P 500 is, you look at where IWM is when we get to it in a minute, and you know, the NASDAQ's not at new highs, but it is doing something slightly constructive, which is it still broke out of this little descending flag or descending channel that it's printing, and looks like it wants to push to new highs. It's just sort of going a little bit slower. And if it can continue its momentum upwards, it should ideally push past 183. And if we weren't looking at FOMC today, and we're just trading a vacuum, I'd say that's the next move for the NASDAQ, is it's going to push to new highs. And I think that's still the most likely scenario. I don't expect FOMC to be a big event today. I think that the news is kind of a known commodity right now as far as interest rates are concerned. I could be wrong. And if something comes out of left field, then there's a decent chance that we break below this convergence of trend lines and head down to maybe 174, 175, and then possibly even down to 170. But if it's a non-event, I expect us to sort of maintain this trajectory and to start pushing towards new highs and see if we could extend this run. Now, this is the first example I want to point out of why it looks like maybe the S&P 500 is ready to push past and develop a new range. The NASDAQ already did it a few months ago, right? This was the range. You can even if you wanted to do it this way, this was the range that we spent the opening of the year at, right? And you can see we've spent the last 2 or 3 months now extending and building a new range above that one, right? And it's going to be the same picture on IWM. So these were sort of hinting at the possibility that S&P 500 and the Dow Jones would eventually follow suit and start to build upon theirs, right? So this broad range consolidation that we spent the first half of the year in, the NASDAQ has already sort of moved on from that. And IWM and the small caps have also moved on beyond that, right? So it seems like it's a matter of time before the S&P 500 follows suit, and then eventually the Dow Jones sort of does the same thing and, you know, puts on its shoes and starts to walk out the door as well and start to make its way up. But for now, it could be one of these situations where the S&P 500 and the Dow Jones still need more time to sort of pull back and consolidate. And if that's the case, then the NASDAQ is going to have to come back and retest the bottom of that range that I just pointed out, right? So if we do get further selling, then there's a decent chance that, and I think that the range is more like this, there's a decent chance we come back and retest 170 on some bearishness if we, you know, maybe more news comes about Trump having more legal problems, or people start to talk about impeachment again, or if for whatever reason the Fed decides they want to raise interest rates, or they say they're scared and don't want to raise interest rates, anything that spooks investors, then I think that we come back down and retest 170 on the NASDAQ. And if that's the case, then the S&P 500 will have established a ceiling again at its previous highs, and it'll come back and start testing the middle of that range that we had looked at previously. So that's the other potential major scenario we could look at. I think it's a little less likely, at least as far as this week is concerned. It might still be a scenario that plays out over the next month or two. But I think as far as this week is concerned, with the strength that we saw, is particularly what we're seeing on IWM, I feel like that this push to highs it hasn't finished yet. I think that the NASDAQ needs to push and retest its previous highs and try to establish new ones. I think the S&P 500 wants to try to establish a new range above its previous highs as well. And so I feel like that there's still upwards momentum that needs to sort of finish off before we can start figuring out what the market wants to do next. And if that's the case, then I expect NASDAQ and the Qs to come up and retest 183. And so that my expectation right now is that that's going to be the next move. Is we're going to get another green candle. Maybe it's just the way we close today or tomorrow, but I expect us to push to 183. However, with the obvious caveat that if something bad comes out of FOMC, things can change on a dime, right? And that turn on a dime. And I think that's the one thing you always, again, it's not about predicting the markets, right? You want to, obviously, you need to have some sort of ability to predict what's going to happen to do well in trading. But good traders really don't stick to the predictions. They try to outline potential scenarios and then they react. And so what happens is you're ready for whatever scenario occurs. And so I think the more likely scenario is we push to new highs. But I also understand that, you can't. I can't see the future, right? So all I could do is try to outline and give probabilities to each potential scenario. So I think the most likely scenario is we push the highs. But if it doesn't, then I understand where we're going and I wouldn't panic or get scared. As a matter of fact, I actually prefer that we do drop. I think that we're going to actually push the new highs. But personally, I would rather that we drop right now and that we set up we sort of really shake out a lot of buyers and set up better buying opportunities at higher value areas. But I think that's the lesser likely scenario right now. And if it did occur again, I think 170 would be a prime spot. That might not happen. It might be that we just come back and retest 178 and the 50-period moving average and sort of just pull back for 2 or 3 days and then push higher. But if we do really start to pull back, I'd rather see 170. I think that'd be a great spot to look at buying some potential discounts on some tech names. Now, if we look at the Dow Jones, and again, the Dow Jones very firmly in that channel, very similar to the S&P 500. One major difference being that the bottom of the channel is still the major trend line that has been in play for over a year now. The Dow Jones, despite the fact that it's the weakest over the last 5 or 6 months of the 4 major indices, is still the one chart that has not really lost its uptrend as far as just drawing one single trend line over the last year or so. The NASDAQ, while the NASDAQ has still sort of stepped higher, it did sort of have to downshift and it did sort of curve as it was trading and really trade off the moving averages. Obviously, the S&P 500 downshifted, as we saw earlier, lost that trend line, came down, and then starting to try to mimic it at a sort of slower or lower pace. Well, the Dow Jones hasn't really lost anything. It's just still climbing higher. And despite the fact that it's actually still in a range, right? It's still trying to find this balance between being in a broad consolidation range and also still being in a long uptrend, right? And so, as long as this trend continues, I think that it shows that really the bull market that we're in this rally that we've began last year is still for the most part intact. And despite the fact that we've spent a broad amount of time consolidating, we're still in a technically intact uptrend. And I think part of that is because of how fast it accelerated at the end of last year and the beginning of this year, that we've reached a spot where it had plenty of time to sort of have this protracted sort of consolidation, and it's still in a situation now where we can still continue upwards after consolidating for 5 or 6 months and still be in the trend, right? So, a lot of this is still just lingering strength from that strong blow off, almost like a blow off top, except it didn't top out. And so overall, the Dow Jones is again this little paradox of strength and weakness all rolled up in one, right? And we are getting close to the top of that channel, right? And so I think, again, if we look at it, compare this to the S&P 500, which I think is the most likely comparison, we can maybe spend another day or two trying to really push the new highs, and then at that point, we can then sort of consolidate and come back. Now, very similar to the S&P 500 and even to the NASDAQ, if we do pull back, I think I would prefer that, right? Because then we'd get another really nice buying opportunity like we got just 5 or 6 days ago, where we come up and we retest some areas of support, and then from there it could continue higher. That's actually what we explored last Wednesday, right? Was this idea, this convergence of supporting areas. We had the 200-period moving average, we have the long trend line, we have this support area around 250, we have the 50-period moving average. All of these potential support areas sort of made buying at that area a really good sort of idea or scenario. Now, again, it was difficult because we gapped up. And so a lot of traders maybe missed that opportunity on the actual DIA chart because, again, if you didn't buy that one hammer or doji or whatever this is, you really couldn't chase it the next day. But there were a lot of charts that found bounces on that day and continued to make their way upwards. And so the Dow Jones, I think, is still the weakest as far as the last few days are concerned, right? Or as far as the last couple of months are concerned. We're nowhere near our all-time highs. We're still sort of struggling with trying to reclaim that level and still, and not at the middle anymore, but still not at the top of our range, right? You can see we're starting to make our way above. And I think the good thing and the positive thing is that we're in the upper half of the range, right? As opposed to being in the bottom half of the range. So overall, I think that the Dow Jones is in a nice spot, but it's still the weakest, and I think still, if I'm looking for names, this is still the area that I find the least value or the least trading ideas. I think that what we're looking for right now is small caps or possibly some tech names that are trying to play catch-up. And so, we'll see what happens from here. But again, I think overall, the one thing we could take with the Dow Jones is that it didn't break down. It held its uptrend. And as long as this uptrend is intact, I think that overall, again, this leads me to think that the markets are ready to continue higher. We didn't lose the uptrend. This wasn't sort of the anchor that was going to drag the other indices down. It ended up following suit and starting to march its way higher. And again, it still needs a lot more room to get back towards 265 or 266, but I think it's doing okay. And at this point, it's really a question of, again, can it maintain this channel, and how long does it maintain this channel? If it does, then we should reach all-time highs in the course of the next probably couple of months. Again, I think that this one is definitely lagging compared to what we're seeing in the other indices, but overall, I think it's still in a good spot. All right, please. All right, let's look at IWM. All right, so if we look at IWM, here's the chart that I think sort of displays the bullishness in the markets with the best picture right now. Interestingly enough, last Wednesday, this was the most bearish of the four indices or the four index charts that we looked at, right? Because it was the only one that was actually dealing with a convergence of resistance. And once it was able to push past that, you can see it just exploded higher, right? And pushed to new highs. We're trying to establish again a new range. So ideally, what we'll see here is maybe another day or two of upwards price action, and then we come back, and as long as we sit above 170, then maybe it's another range, right? Maybe it's another one of these stair steps. Again, if we just kind of come back and take a look at what's happened throughout this year, we had this nice broad range consolidation, which we were ready for, and then we just established a new sort of stair step higher, and now we're actually attempting to start a third step. Now, sometimes these start to shrink as we move forward, as momentum starts to wane. So maybe this was not going to be quite as wide. But who knows? It could go. We don't really know what the top of that range is until it's established through price action. And at the moment, that would be the most bullish scenario, right? Obviously, is IWM maybe gets another day of upwards price action, comes back and holds above 170. And if it does that, then I think the S&P 500 and the NASDAQ will follow suit and continue to push to new highs, and we'll see the Dow Jones continue to climb along that channel and try to just play catch up. If for whatever reason this becomes a failed breakout, then we're probably going to see more selling pressure on IWM than the other indices. I think I've noticed on the last few times that we start to sell off that we're starting to see volatility pick up a little bit on IWM. Even just a few days ago, last Wednesday when we were looking at it, the small caps were the ones that were sort of struggling to maintain the uptrend, and they were the quickest to sort of pull back. So if we are expecting some selling pressure in the markets, if the FOMC minutes, for whatever reason, sort of have a bearish connotation to them, then I think IWM will be the first sort of hint of that. And what we'll see is we'll see us lose this 170 level pretty quickly and come down and probably lose our moving averages, the 20 and the 50. And if you see IWM start to flirt with and lose those moving averages, then I think that's a pretty good hint that we're going to head lower. Obviously, at that point, we've already headed lower. But I think it means that we're going to head down, probably back down to this 165 to 163 range. And we'll see the more bearish scenarios that I outlined in the other indices. Now, again, what I mean by more bearish is in the short term. I think overall, we're still in a very strong market, still in a strong uptrend, and I don't want anyone to think that when I point out these areas that I'm saying that the market's going to top out. That is not in the picture at all right now. Even if we fail these breakouts, even if we come down and head to some support areas, I'm looking at it as buying opportunities. I'm not looking at it as a market that's under siege or ready to roll over or top out. I don't think there's any indication whatsoever in the markets that we're close to a top. There have been scenarios in the past couple years where there was maybe the beginnings of warning signals that ended up being nothing, right? And I think at this point, again, there isn't even a warning signal. There's nothing right now to sort of say that there's a potential for a market to roll over to top out, right? So that's the one thing I want you, the one certainty that you should take from this webinar today is if I talk about pulling back, or if the market does pull back, it's gonna be a buying opportunity more likely than not. And if it isn't a buying opportunity, it'll be a warning signal. We'll see that the way the price action erodes, and that'll tell us whether we need to step back and be more careful. But I don't think we're at that situation yet. I don't think we're anywhere near that situation. I think at this point we're still waiting and we're still trusting on the bullish demand in this market until it changes character. And I don't think it's really ready to change character yet. You can see it in the long-term uptrends that we're seeing in the Dow Jones, the way IWM, the way the NASDAQ, the way they've been stair-stepping higher. Nothing there is really implying any kind of a bearish sentiment in the markets in the long term, even in the intermediate term right now. So I'd say overall, we're still in a very good place, and it's just a matter of understanding what the environment is from week to week so that we can take trades that take advantage of whatever the price action is bringing us from week to week. And so again, I think right now the biggest issue I have is that the market looks strong and looks like it wants to go higher, but the trading opportunities are a little bit more scarce because, again, most good trades have already moved forward, right? You follow, if you, any of you guys, there's quite a few of you now that have joined, that are that are subscribers to the Patreon page. If you guys have been trading along, you'll know we've had a lot of trades that are doing really well for us, but a lot of them have already moved on, right? And at this point, trades that aren't moving on and trades that are still sort of setting up, well, they're lagging, right? That means that they're weaker, relatively speaking. And I think that's the biggest issue we have right now, is that the good names have moved forward, and at this point, it's, I don't want to say the bad names, but it's the tired names that aren't moving up, that are more likely to not move up when the market does finally pull back, right? So we're in a situation where trading opportunities aren't fantastic, but the market's in a good place, right? So what we want to do now is just be patient and wait for the next consolidation, and then once we get some consolidation, we should have some new setups to sort of reset and provide us with new opportunities to continue pushing forward. Okay, let's take a quick look at the U.S. dollar. We'll look at gold, silver, and oil, and then we'll move on to the chart requests. If any of you guys have charts you want me to look at, feel free to type them in. Let me know what you're looking at, and whether it's a trade you're already in or a trade that you're looking to enter, and we'll see what we can figure out from these charts. Okay. Now, here's the U.S. dollar, right? And the U.S. dollar has pulled back pretty sharply over the last 4 or 5 days, but that was after it sort of broke out in a pretty quick manner, right? So a big uptick and then a big downturn, right? Sort of showing a false breakout. Not really sure where this is going to go forward. I think, again, this looks like maybe this was something heading into FOMC, and then it turned around. Not really sure where to go with this, if this is indicative of further downside or whether it's indicative of further consolidation. I will say, with the one thing I can say, when I see a chart like this that breaks out so strongly and then gives it back so quickly, it's probably not going to continue breaking out again. I think at this point, if anything, this is indicative of a U.S. dollar that needs to spend more time consolidating, or is going to end up sort of continuing to sell off and eventually break below this trend line. Maybe do something like this where it tries again to bounce and then fails again and then eventually loses that level. Typically, when you see such a breakout that fails that strongly, it's going to take some time to try to break out again. So my sort of the picture I sort of have of the price action is that we are probably going to spend more time consolidating, or maybe even trying to sell a little bit further off. So I'd say overall, again, this looks like it looks like the U.S. dollar needs more time to find new demand before it's ready to move forward. And I think, again, depending on the tone of the FOMC minutes, that might give us a better idea of whether the U.S. dollar is looking for more strength or whether it's going to be weakening a little bit. If we look at it versus the euro finally gained some steam off of a very critical long-term level. Right, we go to the weekly chart, and this 113 to 114, even all the way up to 115, is a major level. You look at where we spent a good portion of the last couple years, really. And when we broke past that level, we didn't even stop for a retest. We just continued all the way up to 125. Now we've come all the way back down to 113. And we finally found some demand. I expect that to be a very strong floor for the euro, right? But we've already gotten that bounce, right? And at this point, we've kind of come up and we're testing sort of the sentiment that sort of knocked it down to begin with. And it's not an easy trend line because there was an attempt to break that trend line that failed. But overall, and I'll get rid of this. This was not important anymore. At this point, the euro has sort of reached a resistance level, and the US dollar looks like it wants to at least try to bounce or have the euro pull back as it starts to deal with this big mess of potential resistance. I'd say this is a messy chart right now. One thing I can point out: 1, 2, 3, 4, 5, 6 strong days in a row means that more likely than not we need some consolidation to build up some momentum. But overall, there's a decent chance that if the outline I pointed out in UUP holds, that this is going to try to push back up into 117 and break these moving averages and this descending trend line. If that's the case, then we can expect the euro to continue to gain traction and try to at least establish and start to build a range here. I don't think it's done with 113.50, 113, somewhere in that area. I think it needs to come back and retest that again, but I think it's going to try to explore higher before it does that. Overall, I'd say that's kind of neutral, though, compared to what I'm seeing overall. Now, if we look at the U.S. versus the Canadian, and again, we've sort of a neutral picture. Overall, this is still a bullish chart for the U.S. dollar, but it does have some. It's starting to get some bearish implications, and that being that it lost this level at 131, is still in this descending channel, which can be looked at as sort of a consolidation range. But it's starting to really struggle. You got the moving averages starting to curl over, and if that's the case, there's a decent chance that it ultimately failed to hold above 131 and needs to come down and start retesting this area around 129. I think that's the more likely scenario, is that it needs to come down and retest 129, which again is bearish for the U.S. dollar, which would sort of play with the idea that the U.S. dollar just failed to break out and needs more time to kind of come back and correct. And then finally, we have the U.S. versus the yen. And again, the U.S. versus the yen looks like it started to really tried to break out and retest the top of that range, and it failed. And at this point has, again, lost a pretty decent level, which is the middle of this range. Right? We look at it in the daily chart. You can see pretty clearly that we broke out, we failed, came back, tried again, failed, and then couldn't even reach it again and then failed, right? So at this point, we have to go into the assumption that the U.S. dollar has turned and needs to head lower, needs to test some lower levels. If it does continue up, I think this 111 again is going to be a big, strong wall of resistance and a likely selling area, if it even makes it all the way up there. So for now, I would say this is a bearish picture of the U.S. dollar. I think the Canadian was slightly bearish, and I think the euro was more neutral, but still, overall, I think all of these charts are showing a change in character in the U.S. dollar, and it looks like maybe it's sort of flipped right now and has become a little bit more bearish and is looking to figure out where people want to come in and buy again. So what does that mean? Well, maybe there's finally some good news for gold and silver. Ray, I see you're in here. I hope you're not still in that J Nugget trade that you've been asking about me every now and then, every month or two. This thing it's gotten ugly. And despite the fact that I see some weakness coming into the U.S. dollar, these charts still don't look that great. I'm still not interested in gold and silver at all. I think even if we do get a bounce on them, and I think that they're due for a bounce, right? When you have this sort of an extended sell-off, eventually you do get a bounce. Just take a look at what happened the last time it did that. It did get a nice strong bounce, but there's so much overhead resistance right now that even if we do get a bounce, I don't think it's indicative of any kind of a trend change. Oh, Ray, you froze and you held. All right. Well, yeah. I mean, I don't think gold and silver have been in a good place. I can't remember the last time we discussed this. I think it was a couple months ago, but I warned you that things were not looking that great. And you know, what do you do? It's part of trading. So I think at this point, again, we've had a nice 4 or 5 day bounce. A lot of that coinciding with the U.S. dollar weakness. I see further weakness in the U.S. dollar, so I think that these will bounce a little bit further, but I don't think that they're at a part yet where they've been constructed enough to change their overall character. They've definitely, look at all the moving averages turning downwards, swooping down, and at this point, honestly, they're in probably a new leg of a bear market. As much as I'd like to see them bottom out, this this is not a bullish chart at all, and it looks like it looks like even the next bounce is more of a selling opportunity than anything else. And until things change, I would venture to say that gold and silver are not looking great. Now, again, I think in the short term they're going to bounce, but I'm not excited about buying them because I think that bounce is going to be short-lived. Here's a look at SLV, which again has lost a major level. This is what we discussed the last few weeks now. Is when you have an equity that loses a major level, you don't want to really be involved in it because chances are more likely that it's going to continue heading lower. And I think at this point, even if it does bounce, it's going to bounce up into that resistance and then continue to head lower. We have what is a pretty clear breakdown. And while I still think that this is a very good long-term price, I'm not interested in buying it until I figure out where the bottom of this is going to be and where the price is going to eventually stabilize. So overall, I think we want to stay away from gold and we want to stay away from silver. And then finally, we have oil, which at least is doing something different. You can see it actually did bounce over the last few days, and is trying to establish 66 to 67 as a floor. It's dealing with some potential resistance right now. I don't want to. That trend line's not 100% that important, but it is something to keep our eye on. And you can see we're breaking out, right? And I think oil wants to come up and retest 70. And then from there, you can see all the moving averages, the tangle of moving averages. I think it's found a floor here around 65. It's kind of interesting the way this works because we have this nice range that's acting as support, and we kind of came up and hit it again. And so at this point, it looks like this is the bottom for oil, and it's going to start to establish this as a range, right? Something like this, or maybe even this. I'm not really sure yet. It's probably going to be something like this as the new range. Now, again, that's not definitive. There's always a decent chance it fails here and comes down and retest 61. But it's starting to look like this is the potential support area, this area here, and that it looks like it wants to continue to at least hold above $65, $66. We'll see how this plays out over the next week or two, but that looks like what's starting to happen with oil. And so at this point, oil names are probably something we could start putting on our watch list again, as it looks like maybe it's going to finally find a bottom and start to sort of stabilize here. All right. So you've been at least you're day trading J Nugget around the position that you're stuck on. So I guess that's okay, Ray. You just have to keep in mind, the same as always. This is good advice for everyone that's in here. You don't want to turn a day trade into an investment, right? And you know that's kind of what happened with Ray, where sometimes as traders, it's difficult to sort of come to terms with the fact that we're going to lose. No matter how good of a trader you are, you're going to lose trades, right? So end of April, right? Wow. So we're all the way now. We're about to get into September, and you have a day trade from April that you're still in. And I don't want to pick on Ray or anything. It's just I know Ray's someone that I've mentored quite a bit in the past, and we've had a lot of discussions like this. And this is an issue I think most traders have, which is trying to come to terms with the fact that you have to lose trades, right? You're not going to win every trade. You need to take a more probabilistic look at trades when you're trading, right? Every trade you have to look at as a probability of outcomes. It's sort of like a baseball hitter that comes up to bat, right? Very good baseball hitter succeeds on maybe 30% of his at bats, maybe 40% if you consider walks, right? And so you can't judge how good or bad he is or whether he's successful off of one at bat. Right, you have to look at a sample size of not even a dozen. You have to look at hundreds, hundreds of at bats before you get a good gauge of where he is and what he's doing. And that's kind of the case with trading, right? You can't gauge your success as a trader over the course of one trade because every trade has a certain randomness that comes into play with it, right? So you always have to look at it as a probability, which is, again, admittedly, it's a little bit more difficult with trading to come up with concrete probabilities as to how often you succeed or don't. But I think in general, you have to approach it with the mindset that you know you're going to succeed a certain amount of times and you're going to fail a certain amount of times. And what you want to do is make sure that your successes outweigh your defeats, right? And a lot of times where we get into trouble as a trader is where we don't want to accept that loss, and we start to play games with, whether it's with moving our stops around, whether it's adding to the trade, whether it's trying to revenge trade, but just different ways to try to not accept defeat. And it ends up usually really hurting us as traders, not just with money, but even psychologically, with our trading mindset and with our process. So that's really one of the big things that we have to come to terms with, is understanding that we're not going to win every trade, and we shouldn't try to win every trade. Okay? Yes, Ray. I think, well, everybody has to really come to terms with that, and that's one of the things that we've tried to work on quite a bit. All right, so Denise, now that we've looked at all these, let's take a look at XOG, extraction oil and gas. Oh, so look at that, an oil name. Oh, these ads are so annoying. All right, so let me look at the weekly chart, because the daily chart's kind of ugly. All right, so we've got a nice floor here. Potential floor, right? Because we did break it. And wow. All right, so this was a recent IPO, right? I'm assuming. All right, so here's some long-term levels that just trying to get an idea of where the price action is, where the support, where the resistance. It's a pretty sloppy chart, right? So I think even these levels aren't that clear-cut, but here's some clear-cut levels that I think are indicative of some turning points in the price action. Okay, so now we can go to the daily chart and see where we are with respect to those, right? And so what you're seeing here is some good support and a potential for a bounce play, and there's a decent vacuum from 12 to 14, right? It sort of already broke out, depending on which way you want to look at it. Let's look at a 30-minute chart. Maybe it gives us a better idea of what's happening here. So here's so we could say this maybe, even if I'm not going to bother with the wicks right now. So we're going to say that it bottomed out. Yesterday was a prime opportunity based off of this chart. I'm not sure if you're in this or you're thinking about buying. If you're in this, I would hope that you bought it 2 days ago. Just entered a trade, target around 18, top of channel. Okay, so I'm sorry, I should have read the rest of the question first. All right, so you just entered. Not sure if you entered today, but ideally the entry was 2 days ago. However, yesterday was fine and today was okay, especially if you're targeting 18. I will point out, after we saw the long-term levels, we go back to the daily chart. And so you're thinking 18. I think 18 is very optimistic. If you're looking for 18, I think that your time frame has to be months, right? Now you said top of channel, so I guess your vision is, are you drawing the channel like this, or are you just saying the top of a horizontal channel? I don't think I'd draw that as a channel right there. I'm not sure if maybe you just mean this right here. The higher highs and the higher lows. Okay. All right. So you mean, I think maybe you mean this, but I don't think I'd draw that either. I don't think that's really a channel. Well, so I don't think it's going to get to 18. Not anytime soon. I think if I were taking this trade, the first target, or the major target, would be here. You can see that's going to be a 200 pair moving average. That's, again, if we focus on the weekly chart, you were using the November peak. Let's go back for a second. All right, so you were using, okay, so you were looking at that as a descending trend line, right? So you were looking at it like so using this November peak. Oh, like this. Okay. So you're saying like that? I still don't see the bottom of that channel. I mean, unless you're saying something like this. Okay. I don't know that I would look at it from that respect. And the reason for that, not necessarily, okay, so the top, I can see the top forming a nice, you can say that's a channel, right? But I think the bottom of this is a mess. And it's not indicative of an ascending channel because you have lower lows, right? And then yes, it just flipped here. But if that's the case, then we need to look at more relevant price action in the short term, which would have been something like this maybe, which we lost as well, right? So I think at this point, if we're really trying to understand and gauge the price action, then I think that at this point these are remnants of the past. I don't think that they're that valid right now. Not saying that we can eventually come up and retest them, but that it's going to take a long time to retest them. And just based off of how much we've sold off in this area, I think that it needs to kind of come up and retest 14. Not saying it can't touch 18 again, but it's going to have to jump a lot of hurdles or clear a lot of hurdles to get back to that price range, and it's probably going to be over the course of a few months. For now, I think ideally what we're looking for in this particular case is you want to come up to 14, and then once it hits 14, then you can sort of decide whether it has enough momentum to kind of come up to 1550. And then if it could break 1550, then sure, go on ahead. But what I do here is maybe target here, target this area, just below it, as your first target, and then take some profits, and then see how it navigates this area, and then from there move forward. But with the realization that that's going to be a multi-month trade, that's not going to be a quick swing trade. If you're expecting this to be a quick swing trade to 18, then that's not gonna work. I think that this was a pretty drastic breakdown when it lost 15 and came all the way back down. And I think if anything, that's a clear signal saying that this is not an $18 stock at the moment. So I don't expect this to come back to 18. I think at this point, to look at it from the perspective of the mass, the crowd that's buying this, right? They've come to the conclusion. All right, so let's sort of step back. Let's look at it like this. We're going to go all the way back to when it IPO'd, right? It IPO'd, and so common sense would say this is a $20 stock, right? 20 to 22. It tried to go up to 25, and people said, you know what, this isn't worth 25. You know what, it's not even worth 20. And it comes down, and they're like, you know what, it's probably about a $15 stock. Every time it comes to 16 or 15, people buy it, right? They buy it here, then they buy here, then they buy here, and then they buy here. So they're saying, you know what, this is about a $15, $16 stock. And then what happens? Whoa, you know what, this is not worth 15, this is worth 13. And then they're like, well, you know what, maybe we're wrong. Maybe it's not worth 13. Maybe it's a $10 stock or $11 stock. And at 11, that's when they say, yeah, you know what, we're right, it's 11. And then they come back and like, oh, maybe we were wrong. Maybe it was a $15 stock, right? And that's why it kind of comes up to there. And again, the issue comes up. They're like, well, this might be 15, but it certainly is not worth more than 15. This is probably still a $10 or $11 stock, right? So it kind of comes down, and it comes down again. And again, you get the same people that say, whoa, $11, that's a good bargain. This is definitely an $11 stock. And then it comes back up, and again, they say, you know what? Is it worth 15? I don't know if it is or not. And it's, okay, maybe it is. They're like, no, you know what? We were right. It wasn't worth 15. And it comes all the way back down again. But the one thing they can say for sure is this is an $11 stock, right? So they're happy at 11. They just bought it again. And now the issue is they need to come up and tell themselves, is this still worth 15? So I would say for sure they don't think it's worth 18 because it's really struggling every time it gets to that level. But at the very least, we can look at it again as it kind of comes back up to that 15 range, right? So I know it's a little bit of a long-winded explanation, but it helps sometimes to understand that these trend lines are again, it's what people think. It's not just connecting dots on a chart, and it's not actually indicative at all of what this company is. It's telling us what people think of this particular name. So yeah, just I would say be quicker about your profits than waiting for 18. Okay. All right. We're gonna look at two. Scott, don't worry, we'll look at Facebook, and we'll look at Ray. You want to look at Tandem. Yeah, it keeps climbing. Well, you did have a chance, Ray. You had a chance here at 25. And this is a perfect example of these names that once just because you break an ascending channel doesn't mean that it's dead, right? And what happened? It came down and retested, and then it broke out. It had a nice little flag here, and then it broke out again. And I would say at this point you have to wait. Obviously, at this point, especially if you're looking at this as a longer-term chart, I wouldn't buy this channel at all. I'd wait, and we have to wait for our next pullback. Probably down to 33 to 32, and then from there you can look at it again. But yeah, this thing has been a massive uptrend, right? This is actually a really nice chart, and it might be difficult to trade right now, but long term this is a beautiful chart. And yeah, we'll see where it keeps going. I should add this to my watch list because I didn't pay attention to it. I'll look at it again, and hopefully it gets a buying opportunity soon. But this is not worth the buy right now. And well, I mean, risk reward's not worth it here. All right, even with options, it's not worth it. Options don't make it so that you can ignore the normal rules of risk and probability. I think putting options into this doesn't really change what we're seeing on the chart. It's still a chart that's doing it's the same thing we're discussing with the market. It's sort of a paradox, but the chart is too strong to give us a good buying opportunity right now. We just, there's no substitute for patience and just waiting for a better opportunity. Now, that being said, Ray, there were buying opportunities here. There were two very clear opportunities here. One was to buy here, and the other was to buy here. And I think those are both pretty clear momentum opportunities that were missed. But I think at this point, this is not a buying opportunity. We just need to wait for this to settle down a bit. Okay. All right, and then finally, Scott, you want to look at Facebook now? Interestingly enough, I actually made a video yesterday on some tech names, and Facebook was one of the ones that I looked at. If you have any interest in that, Scott, you just head on over to patreon.com/StockDarts. It's a free video. It's also on my YouTube channel. And I looked at Facebook, Google, and Microsoft. And the idea was to explore a few of these tech names that have not broken out yet, despite the fact that the market is breaking out. And so the play was based off of the fact that I expect the NASDAQ, and again, this was yesterday, I expected the NASDAQ to follow suit and break out to new highs like the rest of the market. And assuming nothing happens with FOMC, that's still what I'm expecting, right? And if that's the case, then I would hope that some of these names would follow suit. So I think Facebook is actually presenting a decent opportunity if it can break this really short-term downtrend and establish this as a level. Now again, what I'm looking at here is, you look at the weekly chart, and this level here around 172 is a decent opportunity to develop a floor, right? It was resistance. It came up. We've bounced on it a few times. We did have that short-term failure, but we came up and then earnings gapped or moved all the way down to that level, and that level has acted as a floor so far. Now, there's a war going on with Facebook right now as to whether it could hold here, and there is a chance that this floor fails, right? Again, there's a reason this hasn't broken out yet, right? The markets are at new highs, and Facebook is struggling with this floor. So I don't want to say this is a fantastic long opportunity, but I do think that if we can find buyers here again, which we are trying to, and at the moment not finding, but if we do find buyers here, I think this makes for a good buying opportunity for a move back up to 180, and then possibly all the way up to 188 and into this gap. And the first thing you need to do is, again, if we look at, say, maybe a 15 or 30-minute chart, we'll go to 15 to get a clear picture. The first thing it needs to do is it needs to break this Jesus. There we go. It needs to break the pattern of lower highs, right? On the 15, 30-minute chart, hour, whatever you want to look at. You can see it's still struggling. Once it can break that, then we've got potential for it to at least start exploring this area here, right? And so ideally, this is the short-term trade, is once it can get above, say, 173.30, then we can look at it with the potential for 6 points of upside to get back into this range, maybe 5 points of upside, maybe to 178, but start to explore that area, right? So I think that this is a decent play. Again, if you want more info on it, go ahead and check out the video. And you can see what my thoughts were on it yesterday, as well as what I thought about Google and what I thought about Microsoft. But I do think that this actually presents a decent opportunity, but it actually needs to prove something before I go ahead and get involved. I'm not going to just buy it right now. I mean, I might buy it this afternoon or tomorrow, depending on how it behaves. But at the moment, it still hasn't broken that really short-term selling pressure, which at the very least would be indicative of a bottom. Yes, we've got some wicks here, but we've also got some selling pressure. And until that selling pressure turns into buying pressure, I'm still going to wait on it. And keep in mind, the 20 period swooping down really hard. It will need to overcome that 20 period moving average. And if you're a more conservative trader and you don't want to trade off just that 15-minute pattern, then maybe you want to wait for it to get above the 20 period moving average. And then at that point, you can look at it again. And again, there's a nice gap here. And it worked its way into it a little bit, but there's a big gap here that needs to hopefully be filled. Now, again, I don't expect it 214. If you're looking at that, that's pie in the sky. It will get there probably, but in a matter of months, probably quarters. It probably needs more earnings events before it comes up and retests this 215. So that's not what I'm looking at all right now. If you're a long-term trader, yeah, 215 is a great spot. You know, that's something you could pay attention to. If you're a long-term trader, 175, 172, this is a good spot to start looking at, possibly adding to a core position. But if we're swing trading, then, you know, you just want to start looking at stuff like this, right? Okay, Scott. Yeah, that's right. You're one of the members. Well, you should stop by for sure. Like, it doesn't take long. It's pretty simple. It's just a bunch of posts. You don't have to go through all the old posts at this point. You just want to look to the new ones. Yeah, I mean, the video's on there. So if you want more information on that, it's like I don't know, 5-10 minutes tops. I don't think it's even a 10-minute video. I think I spent 5 or 6 minutes discussing some of those charts. Okay. But other than that, I think, like I said, everything that I put on that video is what I'm thinking about right now. It's everything I just pointed out there. Okay. And that's pretty much it for today. I want to thank you guys for participating. Those of you that are patrons, I want to thank you again for subscribing to the site. I'm hoping you're getting good value out of it. It's, again, I think a pretty good deal. But I'm hoping that these ideas are leading to fruitful trades for you guys. I've been putting up some interesting ideas on there, and I think quite a few of them have panned out. So I'm hoping that you guys are benefiting from that. If not, let me know why not. If you're having trouble with it, you're having trouble with the timing, whatever it is, and maybe we'll see if we can set up a special session where we could discuss some of these issues or some of the problems that traders are having. Other than that, I want to thank you guys all again. Have a good rest of today. Keep an eye on FOMC, and we will meet again next Wednesday.